Welcome back to Talk Tickers, where we break down earnings calls so you don't have to.
You got it.
Today, we're going to be diving deep into Caterpillar's Q4 2024 report.
All right.
And let me tell you, it's about way more than just bulldozers and excavators. We're talking data centers, global energy trends, and even a peek into how Caterpillar is tackling sustainability.
Yeah, it's fascinating to see how a company known for its heavy machinery is positioning itself for the future.
Exactly. So to kick things off, Caterpillar closed out 2024 with record adjusted profit per share, hitting $21.90.
Wow.
That's a solid 3% increase compared to 2023.
Nice.
And their adjusted operating profit margin was impressive, coming in at 20.7%,
Really?
which exceeded their own target range.
Wow. What's really interesting here is that they managed to pull this off even though their total revenue dipped slightly compared to last year. It seems their secret weapon was service revenue.
Area to watch.
Sure.
It shows they're not just selling equipment.
Right.
They're building lasting relationships with their customers.
Right.
But here's where things get even more interesting.
Okay.
Since 2019, Caterpillar has been steadily buying back its own shares, reducing the number of outstanding shares by a whopping 18%.
That's a huge move.
Yeah.
It signals that Caterpillar believes its own stock is undervalued.
Yeah.
It also boosts earnings per share, which makes the company look even more attractive to investors.
Oh, yeah.
They're basically putting their money where their mouth is.
Okay, so the big picture looks pretty good.
It does.
But let's zoom in and see what's happening within Caterpillar's different business segments.
Okay.
Construction industries, their bread and butter, saw a slight dip in sales.
Right.
North America, in particular, experienced lower demand for new equipment.
Right, but it's not because construction activity is slowing down. In fact, construction spending in North America remain healthy,
Okay.
thanks to ongoing infrastructure projects and government investments.
Yeah.
The dip in sales is likely due to dealers adjusting their inventory levels.
So it's more of a behind-the-scenes inventory shuffle
Yeah.
than a sign of weakness in the construction market.
Exactly.
Okay.
Now, when we look at other regions, Asia-Pacific is facing some headwinds from a softer economy, while construction activity in Latin America has seen a moderate decline.
Interesting. So different regions, different stories.
Yep.
What about their resource industries segment?
Resource industries also saw a dip in sales, but there's a silver lining.
Okay.
Rebuilding activity remains strong, meaning customers are still investing in maintaining their existing fleets.
That makes sense.
Yeah.
Even if they're not buying brand new machines, they still need to keep their current equipment running smoothly.
Precisely. And here's where things get really interesting.
Okay.
You might think the global shift toward renewable energy would be bad news for a company like Caterpillar, right?
Yeah, you would think.
Well, they actually see it as a potential positive for resource industries. Well, the energy transition is going to require a lot of raw materials like copper and other metals, which are essential for building things like solar panels and wind turbines. Caterpillar believes that this will increase demand for mining equipment, which is their specialty.
So they're not just adapting to the energy transition,
Yeah.
they're looking for ways to profit from it. That's smart.
For sure.
Speaking of the energy transition, let's talk about their energy and transportation segment.
Okay.
This one's a real star performer.
Absolutely. They're seeing continued growth fueled by strong demand in power generation.
Yeah.
Data centers in particular are a major driver. They need massive amounts of power. And Caterpillar is cashing in by providing reciprocating engines and solar turbines.
They're so bullish on data centers that they're investing heavily to increase their capacity for large reciprocating engines by a massive 125%.
Wow.
It's like they're betting big on the future of cloud computing and the digital world.
It's a bold move, but it seems to be paying off. And it's not just about reciprocating engines. They're also finding success with their new Titan 350 solar turbine, which is being used in both power generation and oil and gas applications.
Wait a minute, oil and gas. I thought we were talking about the energy transition.
Well, it turns out the transition isn't happening as quickly as some people predicted.
Right.
There's still a lot of demand for traditional energy sources, and Caterpillar is capitalizing on that.
Okay.
In fact, they're actually expecting growth in oil and gas in 2025, driven by gas compression and transmission projects.
So it's more of a gradual shift than a sudden switch.
Right.
It seems Caterpillar is playing both sides of the field.
Exactly. They're hedging their bets and positioning themselves to benefit from the evolving energy landscape, however it unfolds.
Okay, so far we've covered construction industries, resource industries, and energy and transportation.
Right.
Now let's take a quick look at their financial products segment.
Okay, this segment focuses on financing the purchase of Caterpillar equipment,
Ah.
and it's a fascinating window into the financial health of their customer base.
Yeah.
In Q4, revenue was up thanks to higher financing rates, but profit dipped a bit due to lower margins and a higher provision for credit losses.
So a mixed bag in financial products, but what does it tell us about Caterpillar's customers?
Well, the fact that financing rates are healthy and demand for used equipment is booming suggests that their customers are generally in good shape and optimistic about the future.
Okay.
They're willing to invest and expand their operations, which is a positive sign for Caterpillar's long-term growth.
It's like having a real-time economic indicator specific to their customer base.
Yeah.
Very insightful. Now let's shift gears and talk about sustainability.
Okay.
Caterpillar made a splash at CES 2025, showcasing its commitment to sustainability initiatives.
Yeah, they're focusing on 4 key areas: autonomy, alternative fuels, connectivity and digital, and electrification.
Wow, that's a mouthful.
A major highlight was their hybrid electric Cat 972 wheel loader. Imagine a construction site with near-silent, emission-free loaders.
That's pretty cool.
Yeah.
It seems like they're pushing the boundaries of what's possible in the heavy equipment industry, merging their traditional strengths with cutting-edge technology.
It's a testament to their commitment to innovation and adapt into a changing world.
Yeah.
They're demonstrating that sustainability isn't just a trend, it's a core part of their future strategy.
Okay, so we've covered a lot of ground.
We have.
Let's wrap up with Caterpillar's overall outlook for 2025.
All right, they're anticipating slightly lower overall sales for the year,
Okay.
but they expect continued strength in energy and transportation to offset declines in construction and resource industries.
Okay.
They also project that service revenue will continue to grow across all segments.
Service revenue really seems to be a key area of focus for them.
Yeah.
What about the profitability?
While they expect their adjusted operating profit margin to be slightly lower in 2024,
Okay.
it'll still fall within the top half of their target range.
So they're managing expectations, but still aiming for strong profitability.
Yes.
What about their free cash flow?
Okay.
For those who don't speak finance, free cash flow is essentially the cash a company has left over after paying for its operations and investments.
Right. It's a key indicator of financial health.
Yeah.
Caterpillar expects its ME&T free cash flow, that's free cash flow from machinery, energy, and transportation, to remain strong in the top half of their $5 billion to $10 billion target range.
That's a healthy amount of cash flow,
Yeah.
which gives them flexibility to invest in growth, pay dividends, buy back shares, or even make acquisitions. Now let's zero in on the first quarter of 2025.
Yeah.
What are they expecting?
They anticipate lower sales compared to previous years, particularly in construction industries.
Okay.
This is likely due to dealers continuing to adjust their inventory levels and the impact of pricing programs.
So a bit of a slow start to the year,
Yeah.
especially in construction industries.
Especially in construction industries.
What about their other segments?
Energy and transportation is expected to see more normalized seasonality, with sales growing throughout the year.
Okay, and what about their profit margins in the first quarter?
They don't expect the typical first quarter margin boost
Yeah.
due to the impact of volume and pricing pressure.
Okay.
So a bit of a muted start to the year overall, but they remain confident about their full year outlook.
All right, that was a comprehensive overview of Caterpillar's Q4 2024 earnings call.
Yeah.
They're clearly facing some challenges, but they're also capitalizing on some exciting opportunities.
Indeed. It'll be interesting to see how they navigate the evolving landscape in 2025.
Yeah.
They seem to be making strategic moves to position themselves for long-term success, from their focus on service revenue to their embrace of sustainability and the energy transition.
Okay, it's time for our This Is Not Financial Advice segment, where we take everything we've learned and cook up an outrageous but plausible trade idea.
All right, what's got your contrarian senses tingling today?
All right, let's take some questions from our listeners who are joining us live for this deep dive into Caterpillar's Q4 2024 earnings.
That's good.
You know, we'd love to hear your thoughts and perspectives. What jumped out at you from this report? What are you curious about?
We've got a great question here from Mike, who asks, Caterpillar mentioned that North American construction sales are expected to decline slightly in 2025, but overall construction spending is projected to remain flat. What's behind that discrepancy? Is it just dealer inventory adjustments, or is there something else going on?
Yeah, great question, Mike.
Yeah, I was wondering about that too.
It seems like there's more to the story than just inventory adjustments.
Yeah.
What do you think?
Well, remember, Caterpillar is a global company, but this particular prediction is specific to North America.
Right.
It suggests they're anticipating a shift in the types of construction projects happening.
Okay.
For example, residential construction has been booming lately, but that could start to cool down while infrastructure spending ramps up. We know there's a huge push for infrastructure improvements in the U.S., so that could be a major factor.
That makes a lot of sense.
Yeah.
It's like a seesaw effect.
Yeah.
One side goes down, the other side goes up, but it all balances out in the end. So even if residential construction slows down, Caterpillar could benefit from the increased demand for equipment used in infrastructure projects.
Exactly. It's all about understanding the nuances of each segment and region. Caterpillar is essentially betting on a shift in the mix of projects, not necessarily a decline in overall construction activity.
Okay, I've got another question here. This one comes from Sarah, who asks, I was intrigued by Caterpillar's investments in sustainable technologies like that hybrid electric wheel loader. Do you think this is just a PR move, or are they serious about becoming a leader in sustainable equipment?
That's a great question, Sarah. I think it's more than just a PR stunt.
Yeah.
Remember, they're putting their money where their mouth is by investing heavily in research and development for these new technologies. And they're showcasing these innovations at major events like CES, which indicates they're serious about making a splash in this space.
Plus, let's not forget that sustainability is becoming increasingly important for their customers, too.
Right.
Many construction companies and governments are setting ambitious goals to reduce their environmental impact. So Caterpillar is also responding to the evolving demands of the market.
Right. Think about it. If you're a construction company and you have the option to buy a traditional diesel-powered loader or a quieter, more efficient hybrid electric loader, which one are you going to choose, especially if the price difference isn't that significant?
Especially if there are government incentives or regulations that favor the greener option.
Exactly.
It seems like Caterpillar is strategically positioning itself to be a one-stop shop for both traditional and sustainable equipment.
Exactly. They're trying to have their cake and eat it too. And from a business perspective, that's a pretty smart move.
Okay, we've got time for one more question. This one comes from David, who asks, I'm curious about Caterpillar's exposure to global economic trends. How do factors like inflation, rise in interest rates, and geopolitical instability affect their business?
It is a big one, and it's a question on a lot of investors' minds right now. Remember, Caterpillar is a cyclical company. That means its performance is closely tied to the overall health of the global economy.
Okay.
When the economy is strong, demand for construction and mining equipment goes up and Caterpillar benefits. But when the economy slows down, demand weakens and Caterpillar feels the pinch.
So things like inflation and rise in interest rates could definitely put a damper on their business.
Yes.
Inflation increases their costs, and rise in interest rates make it more expensive for their customers to finance new equipment purchases.
Exactly. And then you've got geopolitical instability, which can disrupt supply chains, create uncertainty in the markets, and make it difficult to do business in certain regions.
Yeah.
It's a complex web of factors that Caterpillar has to navigate.
It sounds like they need a crystal ball to predict what's going to happen next.
Well, they can't predict the future, but they can try to anticipate different scenarios and position themselves accordingly.
Okay.
For example, they're diversifying their business by expanding into new markets and investing in new technologies. That helps to mitigate some of the risks associated with being so heavily reliant on the global economy.
Okay, that's all the time we have for listener questions today. But before we wrap up, let's take a step back and think about the big picture.
Okay.
What stood out to you most from this deep dive into Caterpillar's earnings report? What are the key takeaways you want our listeners to walk away with?
Well, I think it's clear that Caterpillar is facing a lot of headwinds.
Yeah.
The global economic outlook is uncertain, inflation is still a concern, and the energy transition is creating both challenges and opportunities. But despite these headwinds, Caterpillar is still a strong and profitable company with a dominant market position. They're making strategic moves to adapt to the changing landscape, and they're clearly thinking long term.
I agree. They're not just sitting back and reacting to events.
Right.
They're proactively trying to shape the future of their industry.
Yes.
Whether it's their investments in sustainable technologies, their focus on service revenue, or their expansion into new markets, they're taking calculated risks and making bold bets.
And they're not afraid to challenge conventional wisdom. Remember their bet on data centers.
Right. Who would have thought that a company known for bulldozers would be playing such a big role in the world of cloud computing?
It just goes to show that you can't judge a book by its cover or a company by its heavy machinery.
Well said. I think this deep dive has given us a lot to think about. It's a fascinating case study in how a legacy company can adapt and thrive in a rapidly changing world.
Absolutely. Now, before we sign off,
It's time for our This Is Not Financial Advice segment.
all right, this is where we let our imaginations run wild and come up with an outrageous but plausible trade idea based on what we've learned today.
Remember, folks, this is purely hypothetical
Yes.
and for entertainment purposes only.
Absolutely. So with that disclaimer out of the way, let's get those creative juices flowing.
All right.
Everyone's talking about Caterpillar's big bet on data centers, and it's definitely a smart move.
Yeah, riding the wave of cloud computing and all that.
But what if we zig when everyone else is zagging? What if we focus on an area that's getting less attention but has huge potential upside? I'm talking about Caterpillar's foray into sustainable technologies.
Okay, you've got my attention. Tell me more.
Imagine a world, maybe not too far in the future, where regulations around emissions become much stricter. Suddenly, those traditional diesel guzzling machines become a liability.
And those shiny new hybrid electric cat loaders start looking pretty attractive.
Exactly. Or what if fuel costs skyrocket due to some geopolitical event? Suddenly, the energy efficiency of those hybrid machines becomes a major selling point.
So you're thinking Caterpillar could be sitting on a gold mine with these sustainable technologies?
Potentially. Right now, it's a small part of their business, flying under the radar, but what if this trend takes off? Early investors who bought Caterpillar stock now, while this segment is still in its infancy, could see massive returns down the road.
There you have it, folks. Our outrageous but plausible trade idea. Buy Caterpillar stock as a long-term play on the rise of sustainable construction and mining equipment.
Love it.
And to reiterate, this is not financial advice.
Nope.
Do your own research, consult with a professional, and invest responsibly.
Always good advice. Now, before we wrap up this deep dive,
Okay.
I want to circle back to something we touched on earlier. Caterpillar's commitment to return in value to shareholders.
Yeah, that 18% reduction in shares outstanding since 2019 is nothing to sneeze at.
It's a clear signal they believe in the long-term value of their company.
Yeah.
They're not just hoarding cash, they're actively putting it back in the hands of their investors through share buybacks and dividends.
Which makes the stock even more attractive for long-term investors, especially those looking for a steady stream of passive income.
Exactly. It shows they're not just focused on growth at all costs. They're also committed to rewarding their shareholders.
So as we wrap up this deep dive into Caterpillar's Q4 2024 earnings call, what are the key takeaways for our listeners?
Well, I think it's safe to say that Caterpillar is at a crossroads.
Yeah.
They're facing challenges from a slowing global economy, inflationary pressures, and the complexities of the energy transition.
For sure.
But they're also embracing opportunities in areas like data centers, sustainable technologies, and service revenue. They're making strategic moves to diversify their business, invest in innovation, and position themselves for long-term growth.
And they're doing all of this while remaining committed to returning value to their shareholders. It's a delicate balancing act, but so far, they seem to be navigating it pretty well.
Well said. I think this earnings call has given us a lot of food for thought. It's clear that Caterpillar is a company in transition, but it's also a company with a lot of potential.
It'll be fascinating to see how their story unfolds in the coming years.
Definitely.
And that's a wrap on this episode of Talk Tickers.
All right.
We hope you found this deep dive into Caterpillar's earnings insightful and engaging.
We did.
As always, we encourage you to do your own research, stay informed, and never stop learning about the world of investing.
Yep.
Until next time, happy investing.